In this video, I'm going to be guiding you through Chapter 6.1, Economic Issues. Here are the syllabus statements. Firstly, I would like to introduce you to a few key terms for this chapter. Gross domestic product, also known as GDP, and this is the value of goods and services produced by a country each year. To illustrate this, imagine a single business was able to sell more goods and services year on year. As a result, they need to hire more people in order to cope with the additional demand. And as a result of employing more employees, their productive capacity increases, making even more goods and services for the next year. And because these additional employees are receiving a salary, they can now spend money on other businesses in the country. And if you multiply this by the amount of businesses in the country, this will result in an increase of GDP, or gross domestic product. The next key term is inflation. This is an increase in price of goods and services over time. To illustrate this, imagine there are 3 chocolate bars left, and there are 5 of you that want to buy one. So what happens is there's going to be a little bit of a bidding war. The top 3 bidders will be able to buy the chocolate, and the other 2 people that are not willing to pay these prices will not get the chocolate. As a result of this, businesses will keep their prices elevated at these levels. Now, inflation applies to everything, all the way down from the raw materials, the finished goods, and the services within the economy. So inflation affects everyone. And our last key term is unemployment. This is the percentage of people or population that are able to work but unable to find a job. Moving on to the business cycle. Please be reminded that we are looking at how these factors affect the business and not the economy. Our first part of the business cycle is growth. This is when GDP rises and unemployment falls. Due to higher incomes, higher standards of living are met. As a result of this, demand for goods and services within the economy increases, and remember, we need to link it back to the business. Their sales will increase, their revenues will increase, and their profits will increase, which results in business expansion. The next stage of the economic cycle is boom. This is when there are very high levels of demand and rapid inflation. As a result of this, every business is looking for people to employ. So we have very low levels of employment, and we could have a potential shortage of skilled workers. This results in wages to increase, business costs will rise, and businesses may have to raise their prices. And this is the effect of a boom for a business. After a big boom period is usually followed by a recession. This will be the opposite of the growth phase of the business cycle, as there is a decline in economic activity, low GDP, and demand for all goods and services in the country falls. As a result of this, unemployment rises, and there will be less demand for businesses, which will mean that they will receive less revenue and less profit. And in this phase of the business cycle, businesses aim to survive. The next phase is a slump. This is when very low economic activity happens in the economy, there's a sustained low GDP, and there are very high levels of unemployment. Many businesses have already closed down or are planning to close down, and demand is at an all-time low. The economy suffers. As businesses have objectives, so do governments. Governments will usually set their country's objectives to maintain economic stability. Please be reminded that we are looking at these objectives with the viewpoint of how it affects the business and not the economy. The first economic objective is inflation. A government's target is low and stable inflation. Inflation is a sustained increase in the price of goods and services within the country. And with high levels of inflation, this means that the prices will rise too rapidly, causing unstable prices within the country. So if the government is not able to control inflation and experiences a high level of inflation, prices of raw materials will increase, which will result in businesses increasing their prices. This leads to less demand for their products, businesses will make less revenue, and as a result, less business expansion will happen within the country. The next government objective is low levels of unemployment. Unemployment is when people are seeking for a job but do not have one. The goal for an economy is to get as low levels of unemployment as possible. Because if they have high levels of unemployment, the government will need to spend on unemployment benefits, which will come out from the government budget. So what are the effects of high levels of unemployment to businesses? Businesses will experience a decreased number of customers. This is due to low disposable income. As people are not employed whilst not receiving an income, demand for goods and services will decrease throughout the economy. And as a result, revenues and profits will fall for all businesses within that country. And the last government objective for their country is to increase its GDP. Their aim is to increase the goods and services produced within the country, as there will be more business opportunities within the country, which results in more job opportunities, which lowers the level of unemployment. There will be higher levels of disposable income, and as a result, the businesses will experience higher levels of demand, more revenue, and more profit. But if a country is experiencing low levels of economic growth, the inverse will happen. Incomes will be lower, unemployment will be higher, spending will decrease, businesses will experience lowered sales, they will get less revenue and profits, and there will be less business competition within the country. Now we move on to the impact of changes in taxes and government spending within the country. Again, please be reminded that we are looking at the impact of fiscal policy on businesses and not the economy. Government spending can be used for many things, such as infrastructure, roads, hospitals, education, schools, security, healthcare, and many, many more. And what are the impacts of government spending? Firstly, construction firms benefit from this as they get contracts to build. These people need jobs. So when these people have jobs, they have more income. When they have more income, they will spend within the economy. There will be better infrastructure for business activity, such as no congestion or a more efficient highway. Businesses that have a large reliance on the transportation of goods will experience higher degrees of efficiency within the country. Small businesses will benefit from grants directly from the government, improving the efficiency and or lowering the cost of production. Jobs in the public sector will increase, meaning again more people will have jobs, incomes, and they will spend more. And overall, this benefits all businesses due to a higher levels of spending, which leads to more demand for goods and services. As a result, more revenue and profit. Next, we have government tax. Taxes are a tool used by the government to gain revenue. This can be in the form of income tax. So an income tax is a tax on, you guessed it, income. So the more tax is on your income, the less you have to spend. Business tax are taxes on profits, and value-added tax is taxes on spending. So if you buy any good or service and it has a 20% value-added tax, this means that 20% of the price that you see goes to the government. So for example, a country with very high taxes, the people inside the country will have less disposable income, which leads to less spending and less retained profit for the business, decreases investment and expansion for the businesses within the country, which as a result, businesses may have to increase their prices due to insufficient demand less revenue and less profit. And now we move on to the impact of the change of the interest rate within the country. And please be reminded again that we are looking at how monetary policy affects the businesses within the country and not the country itself. Interest rates is a percentage of the amount of money charged for its use. Interest rates can affect two things: spending and borrowing. And what are the impacts of high interest rates in a country? Firstly, we need to look at borrowing. The cost of borrowing increases, which makes it more expensive to borrow money. So less businesses will want to expand or invest. This will increase the costs of current loans, which could affect the cash flow of a business, which means it is harder to get a new loan. So therefore, this results in less sales and less revenue and profit. High interest rates also affect consumers as well, as they might also have a current loan which they need to pay off, so they will have lower disposable income. And on top of that, for consumers, it is more expensive for them to borrow money to spend. This then results into less demand for goods and services, less revenue and profit for the businesses. As spending and borrowing are interlinked, as you can see, savings increase while spending will decrease. As they are paying off higher loan repayments, this is the consumer and the business, there will be a reduced demand for goods and services within the economy. As a result, less sales, revenue, and profit for the businesses within the economy. And lastly, how do businesses might respond to these changes? Businesses can respond to high taxes with lower prices, cheaper products, less production, and being more competitive in order to stimulate demand for their goods and services provided. In a high interest rate environment, they might delay or cancel plans to expand their business, or they could sell their assets for cash to reduce their existing loans, as it is very expensive for the interest rate repayment. Now moving on to the solved examination questions. Please be reminded that I have some exam technique playlists in the description below. This covers paper 1 and paper 2. I would like to emphasize for the final time that all of the economic issues in chapter 6.1 has to relate to the business and not the economy. Define recession: when there is a sustained falling level of gross domestic product. Outline 2 ways an increase in inflation might affect CTF. Higher raw material costs for the beds. Employees may ask for a pay rise, reducing the margin of safety. Explain 2 possible effects of an increase of the rate of inflation on Nadia's business. There will be less demand, as customers will have less money to spend on their hairdressing products. Effect 2 may need to increase prices. This is because the raw materials and labor costs increased for its high-quality cuts. This is due to inflation impacts all prices of goods and services. Explain 2 ways in which an increase in economic growth might affect NSN's decision to build a new factory in a country. Way 1. Increase in demand. This is due to higher incomes for cars. This means that NSN will experience more sales, revenue, and profit. Way 2. Employees may ask for higher wages, as NSN's 700 employees may ask for higher wages. This is to prevent them from leaving to a competitor. As a result, higher overhead costs and lower profit margins. Do you think a reduction in the level of unemployment always benefits businesses? Justify your answer. Low unemployment will result in increased amount of sales due to higher levels of disposable income. Businesses might need to pay higher wages to retain skilled employees, as they will not leave for other competitors. Upon evaluation, low unemployment will result in difficulty employing very skilled workers as the supply of labor is low. Overall, low unemployment is beneficial as businesses can charge higher prices due to higher levels of disposable income and high levels of consumer confidence. Identify and explain 2 ways in which higher taxation might affect VIS. Way 1. Reduce demand for VIS's insurance products. And way 2. Increase its prices, which can increase customer complaints. Explain 2 ways that the introduction of a new tourist tax might affect O'Reilly's business. Way 1. Increase price. A tax will force O'Reilly to increase its prices to maintain her profit margins. As a result, her hotel may appear less competitive on the market. Way 2. Lower demand. There will be less demand as she is a sole trader. She will not have the capacity or working capital to keep prices the same. This will negatively affect her revenue and profit. Identify and explain 2 ways higher interest rates might affect Mashita's business. Way 1. Higher borrowing costs. Higher costs to repay back her loan for the cake shop. Way 2. Sell assets to reduce her loan expense to maintain product quality. Explain 2 possible effects of an increase in interest rates on Alana's business. Cost of borrowing increases. She is less likely to borrow more money from the bank to expand in the city center. Effect 2. Less demand. As customers save more at the bank due to higher returns, Alana will experience less demand for her plant-based meals. I hope that helped. I hope you guys have a lovely day. Bye-bye.